Money Arata. Do you want a 3-second length course to teach you how to invest in Bitcoin? Then here it is: buy and never sell. And that's the end of the course. No, don't worry, that was just a joke. Unfortunately, there are people who really believe that this is the best idea, but they are ignoring serious possible risks and several guaranteed problems. Today we will examine the pros and cons of HODL. In 2013, Bitcoin had a strong devaluation of 67% in 18 days. And in the midst of this despair that was taking place in the market, an internet forum user opened a new thread that became world renowned. He wrote, "I'm hodling," just like you see here, with a typo in a word that should actually say hold. That ended up becoming a meme as the author was so stressed under such a high psychological pressure to the point of making mistakes when typing. But even then, he remained strong and stayed grounded, proving that he had diamond hands and he didn't sell. Today, HODL is the word that we use to refer to a strategy of buying and holding Bitcoin, even when there are very strong oscillations in the market. It is the opposite of having weak hands, paper hands. If you have always wanted to enter the world of Bitcoin, but you don't have time, patience, or interest in spending your time keeping pace with the market's ups and downs, then HODL can be a good strategy for your investments, but it has a few risks that you need to consider. Doing what is known as buy and hold is a simple way for you to enter the cryptocurrency world. In order to follow that strategy, all you need to do is to buy Bitcoin and simply not sell it. Even though it seems simple, it takes great discipline and emotional control, and it can be difficult if you're not sure about what you're doing. Apart from that, this strategy has some negative points. Some of these problems are a mere possibility, but there are also other problems that are guaranteed to happen. So to help you decide whether HODL is a good strategy for you, let's try to understand the pros and cons of buying and holding Bitcoin in the long term. This is not financial advice. Please read the full disclaimer before proceeding. HODL is a bet on the long-term rise of Bitcoin, which means abandoning the attempt to predict the right time to buy low and to sell high. Almost all investment strategies can be summarized by two actions: buying low, selling high. That's what all business people do. They buy product for a lower price and then they sell it for a higher price. That is also what investors do in the financial market. For example, when companies' shares are traded in stock market, they buy when they think the price is below the real actual value of the prices, so the shares, what it should be, and then they sell when the price is high. Now the problem is getting the market timing exactly right. How can one know when the price today is low? How to know when the price is high enough to sell? Will it no longer drop? Or will it no longer go higher? In the Diamond Hands course, specifically in lesson 2.0, I explain that these questions are just presented in the wrong way, and that you need to understand your time frame to be better able to answer these questions. If you have not watched it yet, you can take a look at the link arata.se/diamondhands to get access for this program. There are many techniques on discovering how to buy low and sell high. Some investors perform a fundamental analysis to understand more about the companies, and other investors do a technical analysis of the price charts to draw conclusions. And there is also the buy and hold technique. This strategy works when you have a large conviction that an asset will increase in the value in the long term. So the price you're buying today doesn't really matter so much because you have a very high conviction that in the future that asset will cost more. Bringing all of this to the Bitcoin world, HODL is the term that symbolizes exactly the belief that in a few years from now, Bitcoin will be worth much more than today. The stock-to-flow model, for example, estimates that a Bitcoin could be worth $1 million between 2028 and 2030, and explaining that calculation in the episode number 9 of the Money Arata series. If you are very sure that a price like that is going to happen, then you can also imagine that if you buy today and the value is below that, you're buying low. But where does that confidence come from? The belief in the future rise of the Bitcoin price comes from the programmed scarcity and from the impossibility of issuing more coins. When Bitcoin was created, it was certain to have a certain amount of issued coins. That is why, no matter what happens, Bitcoin will always have less than 21 million units in circulation. What makes us certain about this scarcity is mathematics, as well as the immutability characteristic of Bitcoin's time chain. And because of the law of supply and demand, what happens to a scarce asset with an ever increasing demand? The price rises. So if you're sure about this scarcity, you're also sure that the price will rise as long as the demand for Bitcoin keeps existing. Demand is the key point today here in our analysis. We're going to explain everything in a very easy to understand language. Besides, because it is the first successful cryptocurrency on a large scale, that guarantees Bitcoin's advantage over other cryptocurrencies thanks to the power of the network effect. The more people belong to the net, the more valuable it is. HODL has proven to be very profitable up to this point, especially for those who joined some years ago. Those who bought Bitcoin for a cheap price in the past have a great peace of mind. They don't need to keep following the market closely. It would only have to be enough to join early, invest any available amount, and simply hold it and never sell it. Taking a look at today's rates, the price is probably generously above the price that the person paid some years ago. Meanwhile, the HODL strategy also has some disadvantages and some points that are worth looking at. The fact that there is a scarcity does not guarantee necessarily a price increase in Bitcoin. There also has to be demand. If you paid attention during the explanation of the Bitcoin's programmed scarcity, you should also have realized that even though we are certain that Bitcoin has a programmed scarcity because there is a maximum amount of how many can be issued, that scarcity alone does not guarantee that Bitcoin will be more valuable tomorrow. And this happens because in order for Bitcoin to have value, there needs to be a demand, a search or interest in Bitcoin, and we cannot be sure about that. Today, it seems highly improbable, but maybe some years from now, the demand for Bitcoin will decrease. A better cryptocurrency might appear, or maybe all the countries in the world will establish international cooperation to create laws and effective policing together to ban Bitcoin. Or it could be that people simply will not need Bitcoin anymore. Let's first talk about the risk of a superior cryptocurrency appearing, being invented. That risk is very small because of the network effect. See, computer scientists have been working for decades to develop cryptocurrencies. For example, it is worth mentioning the work of Nick Szabo, who proposed Bitgold, or Wei Dai, who innovated with B-Money, and of course, David Chaum, who invented eCash, which almost partnered with Microsoft to integrate it with Windows. And then finally, Satoshi Nakamoto came up with the next step by continuing all these decades-long discussions from the cryptography community. That is to say that Bitcoin didn't emerge from nowhere with a brilliant idea of just one person who wrote a white paper. This work has evolved in the course of a lot of collective work. And thanks to that cooperation among the most brilliant minds on the planet, Bitcoin became the first cryptocurrency that had great popular support. Since many people use Bitcoin and there are many nodes in the network, Bitcoin is by far the network that is the most decentralized and has the biggest computational power, and that cannot be compared to any other cryptocurrency. All that decentralization, that great computational power, makes the Bitcoin network better protected against attacks, so much that the Bitcoin's time chain has never been hacked. This is a unique characteristic that gives the network extreme security. And when it comes to the risk of Bitcoin being banned, it is very difficult to put this kind of prohibition into practice. There is no way of uninventing Bitcoin. In a similar way to the internet, the time chain is a decentralized network without an office, without a CEO. It is not impossible, but actually implementing prohibition like this is very, very difficult. Just take a look at, for example, two countries that put restrictions to Bitcoin, Nigeria and China. Despite the ban, the amount of use is huge because it is very difficult to put such a ban into practice. A well-coordinated global effort would be necessary on the part of all countries together in order to ban Bitcoin in practice. However, the biggest risk is that people might just stop having such a high interest in Bitcoin in the future. The biggest risk for Bitcoin's future is that it stops being useful or desired. Those who want to hodl need to believe that there will be demand. And in order to better understand the risk of people losing interest in Bitcoin, we first need to understand the reason why it is receiving so much attention today. There are, number one, speculative reasons, and number two, fundamental reasons. Speculation is easy to understand, right? There are a lot of people buying Bitcoin simply because they see the price growing every year, and therefore they speculate that it will keep rising, and they don't want to lose that opportunity. But do you know what is the fundamental reason that makes Bitcoin interesting? Just think about it for a while and try answering here in the comments. What is it that justifies Bitcoin becoming more and more valuable every year? Bitcoin's great advantage is that it is a decentralized coin. That means there is no organization or group of people that meet behind closed doors to decide its future. Therefore, money in the form of Bitcoin is subject to less intervention than money in the form of currencies issued by governments. First of all, you don't need anyone's previous authorization. Bitcoin is a permissionless system. There is no intermediary who determines whether you can participate or not. For example, in order for you to get a credit card, you need to be accepted as a client by an operator like Visa or MasterCard. In order to open a bank account, you need to be approved. That means that with centralized money, you can have your right of use denied in case your name has been tarnished, or even depend on your religion or your political opinion in certain places. Yet, Bitcoin does not limit people this way, which guarantees people's right to freedom, a fundamental human right. And apart from that, one of the main problems of centralized money is that the government can decide to change the monetary policy unilaterally at any moment. Bureaucrats can change the interest rate or issue more money with surprise economic packages that can cause inflation and steal the purchasing power from you, as we saw in episode number 3 of the Money Arata series. That is why there is a problem in today's society. The money issued by the government does not truly protect the right to property. If the government can increase inflation at any time, be it by sheer incompetence or just being mean, they can destroy the money that you save throughout your life. The money you have in your bank account will not keep the same purchasing power. Or if you are prosecuted, even if unfairly, a judge might decide to freeze all your bank accounts in a preventive way until the final judgment takes place. You lose temporary access to your property, to your money. And with CBDCs, central bank digital currency, the government can, for example, send you some money as part of an economic stimulus package. There are also some ideas about creating a universal basic income. Well, sounds good, right? It depends. The problem here about this governmental digital money is that politicians can establish through programming that you can only spend that money in pre-authorized shops. They can also schedule a deadline for you to spend that money. And this means that there is an expiry date. If you don't spend it, the money disappears. And this is a clear example of violation to the right to property. Because of all of this, today Bitcoin is highly sought after and it is highly adopted in countries where there are hyperinflation and political crisis. Some families are saving their lives by moving the savings of years of work to Bitcoin, therefore protecting themselves against inflation and against the confiscation of dictators and terrorist and criminal factions. This is the power of decentralized money. You become your own bank, so nobody can confiscate your money, and that enhances your right to property, which is provided in the Universal Declaration of Human Rights. So what needs to be very clear with all those examples is that there is a problem with centralized money, with government money, with national currencies, with fiat money. Centralized money, centralized government money can be used to reduce your right to freedom and your right to property. Now, maybe you think that the examples I'm sharing with you here are exaggerated about countries with hyperinflation, with corrupt governments, or legal uncertainty or conflict situations. But there is a problem that affects everyone, even in the most developed, stable, and comfortable countries. Today, interest rates are getting lower and lower all over the world, and that is why the money you have saved does not yield above the inflation level, and that's how you lose purchasing power over time. Those are some of the reasons that explain the demand for Bitcoin. And now that we understood the unique value that Bitcoin has as a decentralized currency, let's try now to imagine a future scenario in which the demand for Bitcoin decreases. This demand can decrease if governments around the world start adopting more responsible monetary policies and they stop using inflation as a means to reduce the population's purchasing power. The demand for Bitcoin can also decrease if great world peace and respect to the rule of law happen so that the chances of you having your money confiscated or stolen are minimal. And what do you think about all of that? Now you need to make a decision. If you believe that politicians and governments around the world will get better and better, then people's interest in Bitcoin will probably decrease. Now, if you think that governments are becoming worse and worse, more irresponsible, then Bitcoin can be a good protection against abuse. But we cannot figure out what the future will look like. That is why we have had to give you such a long explanation so that now you can understand the important aspects of the usefulness, the use cases for the Bitcoin's demand. These are just the possible risks. Apart from those, there is also higher risk because this one actually is a guaranteed one. If you only hodl and if you never sell, your quality of life will never improve. The problem of doing hodl and never use your bitcoins is kind of obvious, right? If you take that to the extreme, it means you will never profit from bitcoin's valuation, and therefore, by never selling, this guarantees that you will never see an improvement in the quality of your life unless you count just the peace of mind, the emotional comfort of knowing that you have financial assets and reserves whose value will rise a lot. But see, money is not an end in itself. You need to be sure about what your objectives are, what you value the most, and use your money as a tool to fulfill those dreams. So at some point in the future, you will need to use your Bitcoin for something. But there are some problems. The problem with this strategy of buying, holding Bitcoins is that it can take you by surprise. Even if you have a very detailed plan to which you only sell your Bitcoins, 10 years from now, unforeseen events might happen, such as an accident, an illness, or even a great opportunity to buy a very nice house, for example. If you don't already have a good financial reserve for emergencies, or if you know that you will do a big purchase sometime in the future, then your intention of buying and holding maybe is not very well planned. Besides, depending on your degree of knowledge, on your convictions, and the strategies that you use to deal with stress, you might simply not be able to endure the long, bearish moments and see your investment diminish. Or family members, close friends could be start pushing you to take a loss at the worst possible time, then you do some panic sell. So be honest. If you saw your money devaluing 67% in just 18 days, would you really be able to keep it together and say, I'm hodling? Or if you have ever bought Bitcoin or any other kind of investment with some original intention of buying and holding for decades, but in reality you couldn't stand holding it for just a couple of months and actually you sold, losing money, I want to reassure you and tell you there is nothing wrong with you. There are people I know who feel angry and they hold grudges against something because they sold in fear. And then after realizing that if they held a little bit longer, they would have seen the price rise astronomically. Many of those people could even retire by now and have total financial freedom. I'll tell you that one of the reasons that makes hodling so difficult is the lack of strategy. You need to build by yourself the architecture of a system in which you become immune to yourself. So you don't sell at a low point, moved by emotion, by fear, by despair. One of the ways to do that is through the DCA strategy. that we explained in the episode number 8 of the Money Arata series. Apart from DCA, there's so much more you can do, starting to get to know yourself much better and understanding what your profile is. Maybe scalper, day trader, swing trader, position trader, long-term investor, or better than that, making a smart allocation of your portfolio and combining more than one strategy. And that's what we do together in our Diamond Hands course by Arata Academy. All of this needs to be done taking into account your planning's time frame to remind yourself that money exists to be used and to give you and the people you love a better quality of life. Buying Bitcoin and holding it for a long time without selling is a widely spread strategy among investors who are starting, who don't have knowledge or interest in monitoring the market closely to spot the best moment to buy low and sell high. But that strategy has some disadvantages as well. You need to be sure that you will not need that money in the short term, and also you need to have the right conviction to hold your Bitcoins even when the price drops significantly overnight. HODL is a strategy for the long term. But maybe you also have some goals that you would like to accomplish in the short term. In order to make that possible, you need to understand that there are some other strategies that involve a shorter time frame. And if you want to go deeper, I invite you to now get to know our complete Diamond Hands course by visiting arata.se/diamondhands.